Hey guys, how's it going? Alright, so this is going to be step one, alright, of the 3-bar market maker formation method. Okay, now I'm not going to get into why people are making mistakes this day. I'm just going to get to the crunch of it. Okay, alright, first of all we need to take a look at a higher time frame, okay, or in this sense compression. Okay, that's what they refer to. Alright, because you're having smaller time frames compressed into a higher one, thus therefore it's called a compression. Alright, now I'm going to try and keep this short and sweet as possible as I can. What we're looking for is a high, and we're looking for a low, and then we're looking for where the current market price is in relevance to that high or that low. Alright, so if for instance that, let's say we're right here right now, okay, and the market's moving along every 30 minutes creating new bars, right, and we can see that the market price is right here, so it's quite close to that low. So we now know that the market price is going to move up around about 50%, 61%, 78.6 or 88.6 off the whole entire move from this high to this low. Case in point. Here's our Fibonacci. So as the market price is moving, what are we looking for? Are we looking for sells or are we looking for buys? Well, if you don't know, don't worry, it's nothing to be ashamed about. You might think that the logical answer here would be to look for sells because the market is already pulled down from a high. That would make sense. There's nothing wrong in that thinking. But what we need to now understand is, and traverse our mind, traverse our mind over to, is that the market price has already moved away from the low and it's making its kind of ascent upwards, but we have this little bit of congestion here which will trap some people in thinking that the market price is going to come down. Alright? No. Alright, and I can prove this, even though this is hindsight, but I can prove this even in forward examples as well. Alright, so as the market price is moving, you can see how it's made that attempt to try and come down lower, and what it's done is it's stopped and it's pulled away again, and this is referred to as holding the low. Okay, so we're still looking for buyers. So now the market price starts to move up, and then all of a sudden it will stop and start going the other way. Alright, so what did it do? It stopped at 78.6, like I said it would. Alright? Okay, now, let's go back to around about here. Alright? Once you've identified the high and once you've identified the low, you can easily see that this was a downtrend. Now at this particular point right here, market price breaks. Alright, so we're now looking for buyers. Don't worry about this pullback here. Alright, this is only just to try and trick people out because there was some actual supply here, or there was demand that was broken that was turned into supply. If you want to learn more about that, then upgrade or learn this method. Make your money, pay your bills off, get to a point where you're 1 month ahead in your mortgage and your electric and your gas and your water and your car payments and your hospital bills or whatever it is that you may need, or college funds or whatever. And then whatever money you make thereafter, put 50% of it to one side, yeah, to start maybe paying for my course, and the other 50%, put 25% into your trading account, and then leave the other 25% as a rainy day fund. Alright? That's how you manage your money, guys. Alright, and this is why I'm trying to help you guys, so you can get into that position, so you don't have any more financial burdens that will put stress and, you know, on your emotional, you know, thinking when it comes to actually forcing yourself into the market when you shouldn't be. You should be sitting back, cool, calm, collective. Alright? So anyway, so now we actually started to find that the market is starting to pull back and go up higher. So now we're looking for buyers on the way up. Now, since I've said that, once we've gone to the 30 minute, we're going to go to the 5 minute. Alright? And there's the breakaway. So what we're looking for now is the 3-bar formation. And I'll explain that in maybe a part 2. Alright? But we're looking for a sideways accumulation. Yeah? And then we're looking for this 3-bar setup. And we're looking for it to do basically this. Alright, so we mark out our accumulation. I'll show you how to do that in the next video. And then we're looking for the market to pull it out and then come back into that zone. But we're looking for it to come into that 3-bar formation setup. And then once it does, she'll take off. Alright. So now I've mentioned that. Okay. Let's go back to part number 2 for you guys. Alright. And we'll get crack-a-lacking. Alright, because this is the kind of sketch that I just drew out and put into the Telegram group. And you can see that there's our area of a sideways consolidation. Alright, which is basically your retail type of terminology. Alright, well essentially what this is a distribution zone. Alright, and this was actually at the high that was presented, I believe, somewhere up here. Somewhere. I think it was. I lost my place. Might have been back. Yeah, it was back over here. Alright. Okay. And then the market pulled away. Then she comes back into the zone. And then she drops. Or naffs off. Alright. So that's what it is. Alright. So I'm going to leave you with that. And I'm going to go ahead and do part 2 for you. See you in a bit.